Okay. Hey, everybody. Welcome to October 9th, 2025, Thursday's coaching call. We're going to get right into it. We're going to just go through a daily call sheet. Obviously, we know what the call is, but we're just going to go through it objectively as we possibly can, right? So, as you're making your daily call, which is your trade plan for the next day, we just get that open here. Okay, there we go. Okay, there we go. Okay, so first thing we're going to analyze is support and resistance. Okay, so basically, right, as this is coming up into here, I mean, what are we really near, right? We're at if we're looking at Bitcoin daily, sorry for the internet issue, right? We are basically making a new all-time high, right? But we didn't decisively break this balance, right? We broke into it and then we were rising in agony. That's how I was able to call the short reversal the other day. And then we broke back up into the balance and then we popped back into it. So you're technically back into balance, which basically is a false breakout pattern, technically. Even though there's not some huge selling tail, it's we're near and essentially right resistance is going to be stronger than support because we're near an all-time high, and an all-time high is a major resistance zone. Now what you had for support is just like the last couple days pullback lows here, but right, the resistance is going to be stronger than the hang on one second, I just got to go adjust something real quick. Yeah, sorry about that. Okay, so back to analyzing the support resistance category. Oh, can you hear me now? I know I was breaking up a little bit.
Yeah, I can hear you now.
Okay. So right? It's because we're so extreme, right? The resistance is the all-time high. That's going to get a higher weight than support. So, right, as we're doing the daily call sheet, we are going to mark that one more down than up, right? Okay. At best, it would be sideways. It would not be sideways or up because we're near, right? We're at the extreme. Now, if we were near here or here, right, then the support here is major, right, and it outweighs right the resistance, which would be anything we pop up into here because this is a bigger structure than that. By the time we get up here, you're thinking, oh, wow, if this thing fails here, we're near the all time highs, and we could essentially just be making a giant balance again, right? You have, trend line resistance here to show some direction. So that category, I would give the edge to the bears for sure. Now, doesn't mean every category is for the bears or some of them are neutral, right? Look at candlestick pattern, right? Candlestick pattern yesterday, right? Now, this is be one where you could say, okay, I'm not exactly sure, right? Because we broke down here, right? And then we popped up. So technically, the can now this candlestick did not engulf this, but it also didn't close very low. So it's sort of like 50-50. You could mark that sideways for that one, for the candlestick pattern, because it's not giving you anything really great. Like, for example, if we were doing a daily call and this was the data that we had and this was the last day, right? Because we had volatility contraction and we were near major support, right? The next day would be an up day, right? You think direction or sideways up. You would right for the candlestick pattern, but right. But for this one,
Can you elaborate on that a little bit?
yeah, sure. So candlestick pattern is right. It's looking at the next the previous day relative to the day we're at, right? It's seeing what we did that day. Like, do we have a bullish engulfing or a bearish? Do we have a dark cloud cover? Right. In this sense, right, we had an inside day because this day is smaller than the day before. And when you do that, then you get this added edge that I've added to the daily call called volatility contraction. So basically, I should repost this, but I have a thread where I list that daily call template that we're going over right now, which is the basic one. But then I add all the things I additionally add to it, kind of like what you were saying for the ES. Like you kind of had a hunch, you said, well, man, shit, it's been pretty damn bullish, right? So it's like your body has to acknowledge that time frame. Of course it does, right? Because you right now, you know that the big picture and the intermediate bias, the bias is like who's in control, has been bullish, right? But once we get towards, once the leg count overextends it to the point where that gets nullified, you'll become very bullish again once it gets towards that big picture intermediate support, right? So same thing with Bitcoin, right? Bitcoin didn't have that time frame alignment like the ES has. The ES has two time frames aligned, and then one of them like neutral to like neutral bearish, the short one. But this one, right, the last week has been clearly strong, right? If you feel that energy, like who's in control of the last like intermediate bias has been very bullish. Who's in control of the short term bias, like the last couple of days, you could argue neutral. You know what I mean? But right? The big picture right now, for our purposes as a day trader, is neutral in a sense because as it comes up here, I don't know if this is going to be a balanced breakout bigger picture pattern or a false breakout one, like kind of like where it rose in agony and just expands the range. And now, when it usually happens, is if you don't get a clear breakout, it can now probabilistically just go sideways and retest like some lower level, even possibly the lows of balance in principle. Like when this one came up here, tested lows, came up here, tested lows. So yeah, that's I kind of went off the handle a little bit with candlestick pattern. I got to remember as I'm teaching this, and this is how the system is when you're first doing it, is you have to see each of these in isolation, right? So the candlestick pattern on this day would be up because of the volatility contraction and the location at this major support zone, right? It was at the bottom of this trend rather than a reversal. Now
So
this one's up here, so it's
quick
more. Yep.
question on that, Matteo. So when I look at the patterns, like there's the big red bar, right? And then there's the green bar, which is obviously not a piercing pattern or anything like that. It's just a small green up bar. And so you're saying that that would indicate an uptrend?
Are you talking about down here or up here?
Yeah, down on the bottom.
Okay, so yeah, so down on the bottom, right? Right, we talk about different candlestick patterns,
Hmm.
and you know, this isn't like, an obvious piercing or bullish engulfing pattern that you can read intraday. But sorry, guys, 1 second. Sorry, guys, my dogs are just came back. Okay, so 1 second.
So yeah.
Okay, so back to this candlestick pattern, right? Now, technically, the candlestick pattern is called an inside day, right?
Hmm.
Which means that it is a narrower range day than the previous day. It's so not only do we have a narrower range than the previous day, it's contracted, right? And it's small. So you have this compression, you have this volatility contraction, but it's doing so as it's pulling back into this major support zone, right? With this wide double bottom, there's a zero line, there's a hook from extremes. So everything about that candlestick pattern is lending itself because of the contraction to have an up, like a trend up day.
Gotcha. Okay, so it's not when you're looking at the daily call on the date on the candlestick, you're looking at more than just the candlestick. You're looking at it in context with the candlestick before it and the confluence of the zone that it's in.
Yeah, exactly. Because,
Gotcha. Okay.
right, right. So sometimes it's just like, oh, it's a piercing pattern, but then so these ones, right? This one was like the candlestick patterns were like not outright, but because we're so extended, this was like rising in agony energy. So those were like, selling tails, I call them, or I guess they would be called like an inverse dragonfly doji if you want to get really technical, but I call them selling tails. So right now, this one is a bearish engulfing pattern, right? Because you took out all that data. So that would be like a bearish candlestick pattern for that day, right? Now there might be other things why you would go long there. I'm not saying that it's going to be a down day. I'm saying for that category, right? That's a bearish engulfing pattern. So the next day, so for that category, you'd mark sideways down, right? But look at CCI, right? That's a zero line reject, right? So the next, now we go here, right? So what's the candlestick pattern here? It's kind of like uncertain to sideways. There's really no energy there.
Could
It's like
you
a
zoom in
half.
just a little bit, Mateo? Sorry.
Pardon?
Could you zoom in just a little bit?
Yep.
It's a little small
Yeah.
on
So
this. Yeah.
it's sort of like halfway and then we pulled back. So it's not giving us a clear, you know, from a candlestick pattern perspective, it could go either way. So I would mark this either sideways or pretty much uncertain because I don't have, based on how overextended it is, it didn't give me, it's not like, this red day had like, let's say the red day didn't like, let's say this red day had a strong buying tail and then an action reaction. Then you'd have more of a sideways up candlestick pattern the next day, but it closed so heavy. This one, right? It didn't like, the previous day took out 1, 2, 3 days worth of data, right? 1 second. So it took out 3 days worth of data, right? And then the next candlestick as it popped up is green, right? But it didn't take out a day or two. So there's no real, piercing pattern. Yeah, it's definitely green. You could acknowledge it, but it wasn't so extreme that, oh my God, it invalidated how overextended we are in the context of the previous day's bearish engulfing. So just from a candlestick pattern perspective, I would either mark that sideways or uncertain because I don't have a real strong, clear bias uh, of who's in control based on that one category of candlestick pattern. So, okay, so did that make sense, guys?
Yeah. Yes.
Okay. So now we're going to go to the next category, which is swing leg count, right? Okay, guys, sorry about that. There's some dogs issues over here and some family issues. Okay, so going back towards the next pattern or the next category, which is basically swing leg count. That one's pretty, if we just zoom out here, right? Now, granted, someone might be saying, hey, isn't this the start of a new leg? We would really have to have a clear break of this mature balance, which is a mature balance. It's getting ready to break at some point, right? But we didn't have it, that clear breakout where we came back down and retested and then built structure above the breakout point. So technically, this is still zooming out the top of this multiple six leg count up. And because that six leg counts up, and I counted it in the channel, hang on 1 second, guys. Okay, so because we haven't clearly broke that contextually, we're still in the six legs counts up, which is primed for a reversal. So I would mark either one of those like sideways to down or down. You're basically it's like who's in control of that category. I would give that more towards the bears. So I think support resistance, we had more of a red category, one of these two. Candlestick pattern, I would go sideways or uncertain so far. We can mark these if we want, but just for the heck of it, we'll do it. We'll do support resistance. We'll do that. Candlestick pattern, we can go sideways. Swing leg count, we'll go sideways. Then we'll do dog leash. Now, dog leash is an interesting one because it's a nice image of like when a dog gets too far away, you would yank the leash back to the mean. So this is basically a reversion to the mean principle. So if you just look at it, right, if we're anything near all these moving averages, it's really just a sideways category. It's sort of like just showing that you're going to go balance there. But once we start getting too far away from a moving average, right, there's always this reversion to the mean. So at this point in time, right, we've moved kind of too far away from the 200, right? We started here, we've moved all the way up here. Granted, we'd always be coming back even to touch the 50 and the 20, right? Sideways around them, touching, pulling up here. So this one, if we were around these, it would be sideways, but because we've moved significantly enough away from the 200, the pull is towards to eventually retest this. So I would use that as a down category for that one. Okay. Prior momentum, right? Prior momentum is looking for action reaction, right? So an easier way to do it is like, let's say this was the day we were going to do the daily call for this day, right? The prior momentum, right, was the rising in agony energy, which is basically that selling tail, right? So the prime momentum, right, is bearish because as we came up here, quickly sell down, came up here, quickly sell down. Just as if, let's say we were thinking about reloading here, right? Multiple legs down, context of a bigger trend. That means the time. So this time frame is this length. This is multiple time frame alignment analysis. You wouldn't see this on this, but this is down, but this is much bigger. So this is right, and this is buying tails. So that would be a signal up, right? So leg count category or prior, I'm sorry, prior momentum. So that's for that. So this one's a little more ambiguous. That's why I started with the obvious ones because there really isn't a prior momentum, right? It's not like we closed really low here with like a buying tail for action reaction or came up here with the selling tail. It's kind of in between. So I would mark this one sideways. Okay. Let's see if I can do that. Huh. Here we go. Okay. Just to be consistent, we'll go X and an X. Does that make sense, guys? How I'm explaining the prior momentum category?
Yeah, yeah, you're taking into the bigger picture context when you're looking, you're not just looking at the prior day, but you're looking at the bigger picture context.
Yeah, because that's really what it is. I mean, the prior day is the essence of it, but it's like, well, where are we in that prior day? I mean, look how beautiful this prior day is here. I mean, not only the size of it, but just like you said, the context pulling back into this bigger one, 200, all that. I mean, we do isolate these things, but just in and of itself. Whereas if we had a much smaller hammer candle, um, like let's say here, it's just not as smaller. It's at the top here. It's just different. So if you just look at it like 2 days without looking at everything, you're kind of not getting a holistic view. That being said, you don't want to take in so much data that you're all of a sudden trying to do like one of the mistakes that I guess that if you take in all this data, you might be trying to fill out a category thinking, is this a good trade rather than what is this particular category say about, you know what I mean? You might have, let's say, a sideways down call for one category, but overall, right, the whole thing wouldn't be sideways down kind of a thing. So anyway, let's look at so for that with prime momentum kind of neutral sideways for that CCI. Um, right? I mean, what's happening is that we're getting zero line rejects. We haven't really like you notice that this is still green, which is indicating a buy. So it's not super pronounced by anything, but um actually I'm sorry. We have to take it for I'm already doing it for the next day. My bad. We're doing it for today, right? So for the let's say if it closed today, then this would be sideways up because it's a zero line reject. But if we were doing it last night, like before the next day opened, or let's say you woke up in the morning and you didn't want to look at you just do your daily call. As soon as you do it, you just move the candlestick over. You'll notice this is actually an inverse zero line reject, which even though it's not as visually pronounced for Bitcoin, it was actually really pronounced for SWE. If you look at SWE's inverse zero, like SWE had a very pronounced regular uh, zero line reject on this day, and then a nice move up. But then up here, the momentum couldn't really penetrate up through the purple zero line, and that was an inverse zero line reject. And now we're getting another zero line reject today. We'll see how today closes, kind of a thing. It's obviously looks like we're closing pretty heavy, but with a little action reaction towards the end. Now, yeah, so for that one, CCI would be sideways down. We're doing that for today because of that candlestick. Now let's go to moving averages, right? Now for moving averages, right? We talked about that's inverse, right? We're not near anything. So if we're not near a moving average, then you would just mark that one uncertain because it's not giving you an edge. And let's say just if you have no edges, then you just don't trade. So it makes sense. Now we're just going to zoom out. We're going to go to the monthly.
Quick question, Mateo.
Yeah, yeah. Mhm.
So the short term, the 20-day and the nine or the 20-day and the 50-day look to be sideways and the somewhat sideways up on the moving average, and the 200-day looks sideways up. And so when you say it doesn't give you an edge and it doesn't give you information, when you look at that, so you when you say it's not near the moving average, can you elaborate on that a little bit? Oh, you're on mute. Sorry, I didn't realize you were talking, but you're on mute.
Oh God, sorry about that. So yeah, so what I was saying was, what was I saying? Yes, the dog leash, right? Because we're so far away, the way we're using moving averages in that sense is reversion to the mean. So that would be sideways down or down, right? We're going down. But the way that I'm using purely the moving averages category is, are we at a moving average such that it could act as support? Are we like touching it around, or is it acting as resistance, right? So if this yellow one was below that, then it would be sideways up because it would be acting as support. But because we're not near it, I'm not giving it a weight for support or resistance.
I got you. So it's not just about the directional indication of the moving average, but how close we are to it and whether it's going to act as support or resistance.
Right, right. So like
Gotcha.
for
Okay.
example, this
Thank you.
sense, right? It's been trending, and then it went sideways, and then now, so that's like the trend energy stopped, especially when you had this right when the fast one gets below the slower one, right, and then you went up into it, then it was acting as resistance, right, and then it went down. There was also an inverse zero line reject on the CCI there. See that? How well that works. So this is also sort of like a inverse head and shoulders bigger picture pattern. You see how this is a breakout. But now it's like this was really an important zone because this was a key swing high. That was the all-time high, and it also had a double top there. So if you drew a trend line from here to here, see how it just perfectly captured that overshoot, right? So, thinking horizontal support resistance, if you just drew one here, you wouldn't really capture the overshoot. But the idea is that even if you did, like if you had this as a box, then you have a false breakout pattern because it came back into balance. That's why the next day I was so confident given that short setup, right? Because, or, while it was still green, kind of calling that it was going to go down. And that's, yeah, so it's not necessarily a really good thing when you go straight line from one to the other. That's how I knew this thing wasn't just going to straight and go up. I've been talking about that for kind of this last period here. Not that it was like easy to short this because, the energy of it, and then there's that overshoot. But it actually technically is very easy to, it's like it's psychologically hard to short, but it's a very easy rule in the system. Like you basically have to go short at major resistance when the way that we get there is very straight line, right? We went from one end to the other. And then you saw evidence of the candlestick pattern being a reversal here. But not to go holistic yet. That's when I can seamlessly just talk about all these things at once, but we want to go through these like a computer program. So we're going to go to the monthly now, save that. Let's go to the monthly here. Oh, you don't want to go to the monthly that way though. You want to go to the monthly here. So not looking very good for Ethereum either on the monthly, guys. I mean, I have this as sort of a balanced breakout. Like if we did break this with conviction, then the next target, roughly speaking, based on we would have blue sky, right? Is you would just take 100% of this range and break it out. But let's just stick to Bitcoin now for that monthly category, so we don't get too off track. Yeah, I mean, this is wow. Um, right? I mean, if you look at this, right, we went from 100% of this range. We're very close to what, just this basic 100% range principle would call for a reversal, right? Because I mean, even when up here forms a range, starts at least balancing. It did not just break out, right? So hopefully we'll get something like this rather than a steep one, right? But when this pulled back, at least you had this giant bounce breakout, bigger picture at pattern. So the support category on your daily call, your support resistance category, would not only be sideways up to up, but it would also get, because I've added one thing to my daily calls called magnification. For example, like why should, if you're at like a super major support zone, right? Let's say you were here, why should that category only get one weight? It should get a weight of two or three. It should get magnified. Hang on one second, guys. So this was already close enough to the 100% range principle to warrant the expectancy on the exit where the reward to risk ratio would have been, that's why I'm very much monitoring everything right now. You don't want to get, so I would say if you were going to mark this category for your monthly, right? You would have to, at the very least, even though there's a green month here and we're up, you'd have to at least mark it sideways at the very, that's the strongest you could go, right? I'm not saying you have to be the first one that says sideways down for that, but the fact is that if you're only basing that category bullish on the fact that you have one month that's above this month and a little bit of, and we're even below this now, you're not honoring the fact that we've gone 100% of the range here. You see, it has to be the candlestick pattern of where we really are. And at the very least, you should be thinking this thing could start to reverse now because of this principle. I want to be proven otherwise, but that's what we're looking at. I mean, even without me saying that, you could see that there's been a crossover on the stochastics, right, which indicates the momentum's waning. So that category, um, you could go sideways, right? The weekly might be a little bit more favorable. Let's see. Okay, so um, the weekly chart, right? The week the weekly chart is a little bit more favorable because we have a little bit more data of how price arrived there. This is a very bullish candlestick, right? But once again, right, we are making sort of a double top here, right? And it's close enough to this trend line where, you're thinking, okay, now that we've pulled back, I'm at least going to be neutral now for this category as well. Just because of the location of where we are. I'm not outright now. I'm not seeing things like this. Like at this point in time, if you saw a selling tail double top that pulled back like this, that's a reversal signal on the weekly, right? But this one could be something that's more like this. Like next week, it's that October we have that. I'm going to go into that time cycle thing, but what if it's the next week or so? It's pulling back. It's a little bit more red, and then here we get something for a pullback continuation. If we are going to get another up thrust in the fourth quarter. You could see how we didn't just have one strong week and then just have another week where we take off. We're pulling back. It's nothing's out of the and the way we're pulling back is not extremely bearish. For example, right? Let's say you were doing your weekly after this close for the new week. That's a sell signal, right, guys? So that would be sideways down. And then the next couple of weeks, you got your sideways down. When you did your weekly at this point for the next week, you're thinking, okay, well, now I'm at support again. I have the moving average. This could be sideways up, right? The shoulder here, right? And now we are at this resistance again. Let's just draw it a little bit more honest here. Okay. So it's one of those things where it's like, well, it didn't hit that. This is like, how do you know when to take off a runner? Well, you you have to take off a runner here, right? Because you're at a very strong sell area. We'll have to see how price behaves here. This is where people are happy, they're taking profits. So for this one, I'd also mark sideways. If you're going to do looking at the weekly for as it regards to tomorrow. Now the beauty principle is always an interesting one. Let's go to that. Beauty principle is like, well, how did price behave the last time it arrived at this level, right? And let's just get rid of this, and we'll just all right. We have this much data, and we'll try to make it as large as possible because we don't need to see anything else yet, right? Well, so as it closed, price was here, right? And the last time price was at 123,426, it went all the way down here, right? So clearly, right, the beauty principle on that one would also be down, which is, as I was going along today, I was like, man, even though it's like the last couple days long here, um, I listed a couple other reasons why the volume was low. It's like, the last couple of days is usually good in some context, like if that was like down here or something. But I reminded myself, I said, hey, Matt, you should just keep this runner in because we're near this major resistance zone, and this is where you're prone to deeper pullbacks. And that euphoria that you felt the last week or so on this up move is now going to be a sell area where we can now start thinking the opposite. And it's hard to switch out of it, right? But the last time they came up there, right to the T, it went all the way down, right? So I would definitely mark the beauty principle on that one, down to sideways down, whatever you want to do here. Oops, mark that one. Now, assume being short. That's really there's no right or wrong answer to that one. So I'm not sure how. Obviously I shorted first, so I was thinking short. So I actually, if I was gonna, it's hard for me to do this one because I know what the day was. It's already informing me. But I'm going through these as objectively as possible based on the rules. But these two are the gut ones. So I'm just trying to think like, well, I was really looking for shorts today. So I guess I felt good about being short. And I guess I was open to being long on a sideways call, maybe kind of a thing. So I guess I was, open to that, to a degree. So, looking at the daily call, 1, 2, 3, 4, 5, 6, 1, 2, 3, 4, 5. So, kind of this represents kind of, I was neutral to bearish. Like I obviously I wanted to go short more than long. But then basically how kind of I saw the buying tail on the smaller time frame, but I still on my left side here on the screen, the largest time frame that I'm looking at to remind myself to really focus on that time frame is the daily. Because even though that lower time frame buying tail was nice, I still had to remind myself, I'm like, man, look at this. It popped up into here. It's near major resistance. Beauty principle last time went down. We got a false breakout back into balance. Now we didn't get the obvious classic false like everyone wants this one, right? Then we kind of know you better be shorting so ready to on the next day or getting out of your stuff. I mean, look at that, right? Especially if it comes back anywhere near up into here, right? You get to move down. Now it's just a little bit harder when you don't get the obvious selling tail. And this one was tough too, because like, you might think that, well, how did this reverse? It's just such a strong candle. Well, there's another principle that I teach too. It's not just like the candlestick pattern was obviously bearish, right? But if you look at leg count, there's one thing that I've noticed. I said if you're counting up your legs and you notice that the last candlestick was like a little bit larger than the previous last legs candlesticks, that's almost a sell. That is usually a sell signal because you don't want to see strength at the end of a move. You want to see strength at the beginning of a move. Beginning, strength, right? Strength, and then creep up, creep up, creep up, and then usually the strength at the end of the move is a sell signal. So, but like I said, we have to look at the way price arrived here, right? So that obviously is different than us now pulling back into. And this is where the time frame alignment energy comes in because as we were coming up into this, we didn't have the same type of time frame alignment that we have here as this is pulling back into this because this is a very bullish short intermediate term bias because the way price arrived there is very bullish. You see, I'm contextually because it was so strong as it got up here, that's a reversal for the short. But now as it pulls back into it, it's actually going to be more of a problem, more of a pullback than this was because of the time of the maturity of the balance and the strength of this intermediate trend. So yeah, but just to get focused on that, you know, that is does that Kevin, does that make sense? I know this looks a little bit different than the daily call that you were doing, but I know you're just getting back
Yeah.
into it. The thing about this is I just want to stress this enough for everyone listening that these categories are systematically objective. We've written them down. I'm trying to reiterate that I'm not in hindsight filling this out with a skew because I knew it was sideways down. I'm literally going through the rules and showing, uh, this one should be up here. Sorry, guys. Why these categories are the way they are. Now, some of them, like I said, these two a little bit more subjective, and I mean, you might have just not felt like going short, and you had that as up. You had that, that would have been fine.
Mm.
These ones though are pretty objective. Um, and I think we had a lot of the same categories. You had a lot of sideways. I think the things that were different was the swing leg count, and I think that's because at least for the ES is what you were doing the swing leg count for, and that's because you were looking at instinctively, you just didn't maybe have a category for it. Is you were looking at the multiple time frame analysis because especially this one has multiple time frame alignment, whereas Bitcoin does not. Bitcoin has only the intermediate term up. The short term is sort of neutral to bearish, and the big picture now is this giant balance because that's the last 1 to 3 months. So that's July. So you might say, well, Matt, isn't the biggest picture if we zoom out bullish? Well, yeah, there's infinite time frames, but I'm telling you, looking at these three time frames, the short-term bias, the intermediate, and the big picture bias, and then seeing if any of them are aligned in the direction is a really key source of edge because you have time frame alignment, right? But Bitcoin did not have time frame alignment but I'm pretty sure I wrote that, but the ES did, right? And the ES has not the short term isn't bullish. That's fine. The short term is neutral, which is great because anytime it gets to any mediocre support, the longs are usually going to be in control, usually, right? Because you have the big picture and the intermediate term up because it had this crazy bounce breakout, right? But the thing is that we have to temper. That's why the categories always balance each other out. What the multiple time frame alignment doesn't necessarily have is the fact that when you are overextended and it has been so bullish, you are prone to steep pullbacks. And that's where that beautiful leg count category comes in. And you can see one leg, two leg, three leg, four leg, five, six, even seven. You can, depending on your interpretation, you could kind of tell that, oh man, this thing is really over. And then, dog leash, reversion to the mean, hasn't touched the 200 in a dog's age. But unlike Bitcoin, when I do the 100% range principle, this thing isn't even near its balance yet. I mean, the ES is just a monster. And Bitcoin really just hasn't
Mm.
exploded like, the ES has. But I'm not saying it can't. There's a lot of possibilities even left for Bitcoin. But I think, it's just funny that a lot of the guys that are the Bitcoin champions, like the Sailor guy
Sailor.
and
Yeah.
Eric, they were really selling Bitcoin. Hang on a second, guys. Okay, so yet Eric Trump was pushing, you know, this whole Bitcoin narrative right at this major resistance zone. I'm thinking, oh man, it sells. That's why I was really confident to just. It wasn't even red at all, and I was like, we're shorting this. It was like here when I was. Now the execution of it was tough because I was so jazzed to short. I didn't wait like someone. So I just as a note, since a couple things have happened to me, in terms of lose, I'm moving. There's a lot of stress with family right now. My nervous system to execute is not good. So please, if I post a signal, really do your due diligence. Maybe not to shadow me because I'm not 100% on. Even when I did that SWE reload, I knew to go in on Bitcoin and I couldn't because of what I'm going through. But um, you could see that was the essence of Corby's lessons. I gave that sweet reload signal here. By the way, I have that as a position where if it gets near my entry point for the portfolio, I'm going half off on that position or maybe all out of my sweep for a bit. But if we got to see how today closes, there's a moving average here, whatever. But um, that was a good example, just as if you want to just talk about principle. When I had this much information when I was doing the daily call for sweep, right? I said, wow, congestion, congestion, little pullback up, congestion, congestion, little pullback up. And I kind of even said it with that little cadence to get the rhythm of it, like Corby used to. Right. Now, one of the things I didn't do though is that because I said portfolio, I didn't just take, you see when this was rising in agony, but it wasn't quite at its all, these highs yet, but there was this, trend line here. When one of the mistakes I made, and I should have because that was a huge, it doesn't look like as big of a move as Bitcoin, but this has a higher beta, so it was a huge move. Um, I didn't capture all of it yet, and it was a mistake because anytime Bitcoin's at its all-time highs and is rising in agony, I don't care where your alts are, even if it's at a mediocre resistance zone, you should take profits in the short term. It's just one of those things because back in the day they used to really decouple, and they just don't anymore right now. It's just if
Mm-hmm.
Bitcoin's down, they're all down. So, I mean, one of the mistakes I made today on the long too, as I was doing this, is and as I'm analyzing, sometimes you do a trade and there's absolutely zero mistakes and it was still a loss. But one of the things is that I saw it's like, man, the other markets are really red. The intraday bias is down and the sustained momentum is bearish. Bitcoin was had relative strength. And I'm like, it's just a matter of time before it gets a little weaker. So the short was right on because at that point in time, Bitcoin had relative strength at the high of day, but that's a short signal while all the other markets were bearish. So that's why I was really confident on the short. And then, it kind of came down like an inverse V. But it's like, oh, I got out of that runner, and then you see it bounce a little bit. I mean, in hindsight, it looks terrible now, but on those lower time frames, it can really sway you. So, you know, while this was this wide double top, right, this sort of came down kind of fast, right? And we have been waiting resistance higher than support because of the nature of being near that major resistance zone. And unlike ES, which has inter time frame alignment, bullish, Bitcoin has neutral larger time frame bias because the short and the intermediate and the big picture are all different.